Welcome, everyone. I'm Mike Brashazade.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Brashazade.
And I'm Ashley Ward.
And today we're honored to have David Geibel, the president of Girard, a Univest Wealth Division, joining us. Welcome, David.
Hello. Thank you. Nice to be here.
Oh, David, it's a pleasure to have you on the show with us today. Thanks so much for joining us. Let's dive right in. So let's start with your unique journey and origin story. Can you share with us and our listeners your background story and what really motivated you to enter this business, and what experience have led you now to your current role as president of Girard?
Sure. So in 2004, 2005, I was mostly on the institutional side. Had some life circumstance changes and really decided to enter back into or explore the private wealth opportunities. There's a gentleman I worked with on the institutional side who had started his own firm, and we stayed in contact. And he got to a size that he needed some help. So I joined as an advisor and as an employee, and we grew the business pretty significantly over about an 8 to 10 year period. We sold the business to a regional bank, Univest, and he went on to become the president of Wealth, which encompasses several other lines of business, trust. We have a retirement business and a pension business. And then he retired in April of 2020, and I became president in April of 2020. Great fortuitous timing, great timing to replace him as he retired. So it's been actually 19 years with the affiliated companies this month. It's been an exciting and rewarding journey with a lot of change and ups and downs. But I've been here for 19 years for a reason.
Wow. So you've been at Girard for 19 years now?
Yeah, I have. Yes.
So can you tell us a little bit about Girard there? So is Girard, is it like a wholly owned subsidiary of Univest?
Correct. So we have a couple businesses. We have the traditional RIA, which you guys are intimately familiar with. That's our largest business, private client business, we'll call it. We manage about 130 Pennsylvania municipal pension funds as well. That's under a different subsidiary. Then we have our trust business. A lot of our trust business is special needs guardianships. We also have private clients on the trust platform as well. And then lastly, we have a retirement plans division, which is about another 130 clients, mostly 401k, small to mid-size business owners. So those 4 lines of business, each with different leadership, all report up to me. My background and experience has been mostly with the RIA and building and growing an RIA over a couple decade career. But those other businesses are tremendous and meaningful as well. And you have the same thought pattern, which is do right by the client, right? Whether it's a pensioner who's worked hard in public service that's on the end of a pension, or someone who's built a business that has 10 to 12 employees that is making sure you have a good retirement plan for their workers. But our most vulnerable clients on the special needs side, where we, a lot of banks have gotten out of that business, gotten out of the trust business, and we're very committed to it.
Really cool. So talk to us about that for a bit. Under your leadership, you guys have had grown the AUM to about $3 billion there. Is that correct?
Yeah. All those businesses I described is about $5 billion. Okay. The RIA is, we touched it at the end of March. Where it is today might be a little different, but it's interesting. You talked about the origin and my personal journey. What sometimes you make a change because things happen to you that you don't expect. My first child was born. He actually turns 20 next week, and he's a special needs child. And what really drove me to move into to be more entrepreneurial, work with a tiny, small advisory firm at the time. I think we were $50 million. Was I wanted to be in control of my destiny for Thomas's future. We've gone on to have two kids who are healthy, but he's taught me so many lessons in life, and really has helped me become I think, some may argue against it, a good advisor, because you deal with real people with real challenges, and that's what this business is really about. You're helping people get to somewhere they need to be, whether it's selling a business or building growth for retirement. Or we have a lot of clients that are caretakers and take care of other people, and we have a whole team of people that do that because that's how trusts are set up. So I don't know. You start your journey, you don't have that purview when you go into it, but I really feel it now, especially given my 19-year anniversary here and his 20th birthday coincide almost in the same week.
Wow.
Wow.
So can you tell us a little bit more about Girard there? You guys, in growing up to that, $5 billion there, had you guys had the growth come more organically? Had you guys done some inorganic acquisitions? How did you bring the clients through the door to get to that number?
Yeah, we have been part of a custodial referral program that really helped launch our growth in those early years. We sold the business in 2013. But most of the growth has been organic. Now that we're part of a larger bank and a commercial banking institution with 60,000 customers, I think there's about 10 to 12,000 business banking customers. We certainly get introduced to relationships on that side. But we've done some lift outs, and of course there was the Girard acquisition and some other acquisitions along the way, but we really haven't. We've been inactive in the M&A market for the last, I'd say, 10 years. As you guys know, that business has changed pretty radically.
Right.
It's almost like you're an aggregator and you're an acquirer, or you're not, and you better be good at it. We certainly kicked some tires and looked at some firms and got close a couple times. I think at this juncture, given where the market is, we're pretty comfortable being an organic grower. And if we did acquire, I would say we'd be more of an integrator than an aggregator, right? We would want that whatever we brought in to fall under our fold, under our investment process, et cetera. Not every seller is open to that, right? So, clearly we have some goals to grow our business. We think we could do most of that through organic means, and bringing in good people if that something should pop its head up.
And how many total advisors do you guys have currently?
On the RIA, you want to classify as advisor, it's about 20 advisors total.
And how many total teammates there?
Yeah, in the whole division, it's about 80. We have people who are cross, have some dual licenses, but under the whole umbrella, the great team that makes that 5 billion go and those clients go every day, it's about 80 people.
Thank you. I really appreciate that.
Wow, very impressive. So, Dave, let me ask you this. As someone who's built a successful wealth management division, what advice do you have for entrepreneurs in the financial industry looking to establish themselves?
I'm sorry, for someone to establish themselves in this business, coming into it new? Or?
Yeah, as an entrepreneur in this industry who's aspiring wealth advisors, what advice would you give them, given your journey?
Well, I would say you can't do it all yourself. Sometimes you come in as a wealth advisor and you think you can be chief cook and bottle washer, and you're the investment person, and you're doing business development, and you're doing marketing and all that. And you can when you're small, but I think you have to plan ahead that, hey, maybe in a year or two, as I bring on more clients, am I part of an organization that can help me scale? Or if I'm starting my own, what does that future look like? Because you can burn out real fast if you're doing everything for the client, and you can only grow so much if you're a one or two person shop. So, begin with the end in mind, right? As you start, think about what your potential bandwidth is, what you can and cannot, and then what you're good at and what you're not good at, and think about what maybe that next hire looks like. You have to be resilient. It is not easy. I think everybody will tell you that. You're going to lose more than you win. You're going to make decisions and you're going to make mistakes. But you have to, and resilience is a learned behavior. And sometimes the best way to learn it is when things don't always go well. And you learn from your mistakes, right? Talk about resilience, but I like to say fail stands for first attempt in learning. And you're starting a business, you're going to go down a path. Things aren't always going to go as planned. Are you flexible? Do you learn from the mistakes you've made, and can you pivot quickly and accordingly to get back on track? And you have to brush yourself off, right? So those are the really the three things I thought of in answering that question.
Thank you.
Great
and
advice.
you've undoubtedly, implemented strategies that have propelled Girard to success. Can you share a specific tactic or approach that has been particularly effective at your firm there?
Yeah, sure. I don't think you always need to build consensus, but you have to get people involved. So say if you're changing a process or you're doing something that's going to impact the advisors, you're making a decision, maybe you're bringing in a new software, whatever it may be. Get a group of people together and that have different voices and different constituencies, different perspectives, and ask questions, learn from them, because you're going to ultimately make a decision that may or may not impact someone positively or give somebody more work, right? And people want to know, right? Am I heard? Am I valued? Am I appreciated? They may not always agree with your decision or the path forward, but if they had a voice and they had some say, they'll buy in a lot easier. And then when that project or that change does kick off, people are aware of it, they're familiar, they've had some say and input. But I don't have my finger on the pulse of every activity going on here. We're a good size. It's also good from a leadership sometimes say, hey, I was unaware of that. That's a problem. If we went with vendor A instead of vendor B, that might have derailed the project. So ultimately, it's not always a democracy. Somebody needs to make the decision. But if you can give people a voice and an outlet to have their say, I found that anytime you put change in, it just goes a lot smoother.
Yeah. And given your focus on building a client-centric culture and a team of friendly and informed professionals, what steps do you take as a leader to ensure innovation and engagement within your team?
Well, I think first you have to hire people smarter than you, right? So
I agree.
if there's an area, like I'm a business development and advisor, right? But in operations and compliance or technology, we have a CIO. So bring in people who focus and have talent on that. And it's harder when you're smaller, but as you grow your business, certainly think of those things. And let them know that you support their ability to change and look at things. We had a meeting today exploring how are we going to potentially use alternative investments that's all driven by our CIO. And I'm in the meeting there to support him and his team as they explore that, and not be the no police or sit there and think that, hey, I have all the answers on how this is going to work. And let them know it's okay to explore and maybe pivot, right? I've made decisions that weren't correct, that we had to stop doing something and then start doing something different because the decision I made originally maybe wasn't as well thought out or didn't go as planned. And it's okay for your team to have that too. So if you want to foster a culture of innovation or people who explore, you have to let them know that it's okay to fail. It's okay. It's not okay to not learn from it. It's okay to try things. But if you're going to fail fast, pivot, and move on. And certainly, at least the way I lead is, you're not going to hear me complain and say, why did you do that? Or how come that didn't work out? I can tell you, we did more projects last year than we did in the previous 3 combined. And I think it was just sort of this change of culture. That's okay. We can move things along and spread the wealth, right? We had different project leaders and experts in different areas. And that's why we were able to do more, because it wasn't always the same people. It takes time to learn that and build it over years.
Yeah, I think that's a very valuable perspective there. You mentioned you're passionate about advocacy for people with special needs. And also, you're very deeply involved in finance. How do you integrate,
Mhm.
or do you think that you kind of integrate that passion for advocacy within your leadership approach at Girard?
Y- Yeah, I think there's, oftentimes we meet with clients and it's the financial plan and the investments and how they're allocated and what I'll call the science or the quantitative. But people are coming to you or have been introduced because there's a reason. And I think having deep empathy, asking the right questions, and really trying to find the need behind the need often is where advisors, I don't want to say they fail, but they sometimes miss the mark. So really trying to understand what the dynamic is. People are going through things, especially now, right? It's been a challenging time since the pandemic. Um, is there a caregiving situation? Are you caring for an elderly parent? Do you have a special needs child? Or are you trying to give your children an opportunity that you didn't have? Um, People are coming to us for a reason. It's not just a better asset allocation or you have to do those things. That's table stakes in our business. But we actually train our team on this. It's like asking those questions, trying to find the meaning by why people are seeking professional advice. Because advisors have a deep and intimate relationship with their clients. I think more than almost any profession out there, except maybe a family physician. So uh, taking the time to really learn that dynamic, and clients ultimately open up to us about a lot of those things, and I think that's what makes our profession great. We can apply the math and the probability and Monte Carlo and all that, but there's a lot of people with goals and aspirations and fears and challenges, and oftentimes, when I started my career, I didn't think I signed up for that. But then you meet real people that you care about who have real challenges, or they have challenges come up that are unexpected, and the plan has to pivot, and you're coaching people through hard times, through good times, and it's a very rewarding part of the profession. It can take its emotional toll. I like to call it the cost of caring, um, but there's a part of the job of being an advisor that people are so appreciative, so thankful for what you've done for them. And sometimes you see them at a client event, they hug you and they tell you that. I just don't know many other professions that have that type of emotional reward.
Yeah. So, so let me
Yeah.
ask you this: uh, looking ahead, there, what insights on the future of, let's say, Girard, do you guys have in place there? Where do you envision the company in, let's say, the next 5 years? And have you guys, do you guys have a G2 in place there, or is it a, are there individuals underneath you that have been coming up over the last 20 years as well?
Yeah, so we have a fairly we have long tenured employees, but we also have some folks that we've attracted, right? Certainly the that generation. So G2 for us is a little different than, because we're owned by a publicly traded company. It's a bit different than maybe a privately owned firm, but some of the same principles apply. That the next gen advisor needs to be here now. They need to be introduced with clients now. They skew younger, right? I'm Gen X. Not a lot of us, everybody cares about the boomers, and
Right.
and Gen Y. No one cares about Gen X, which I'm fine. So, you know, the future leader, the future Dave, I think is sitting among the 80 women and men that work here. I feel pretty confident about that. How are we training them, giving them opportunities to expand and grow? Um, is it's mission critical. People retire, sometimes people move on. Do you have somebody within your own ranks that can step up? We promoted from within more than we've hired from outside, um, which I'm pretty proud to see. So yeah, G2 is big. It's competitive. Of course, like a lot of other firms, we promote getting the CFP and training, and we'll pay for all that. But some of it is just we have what they call wealth advisor associate programs. So we'll have a wealth advisor, an associate, and they'll partner with them on accounts, on relationships, and get them into the experience of being in front of clients and dealing with client challenges very early in their career, right? Because they're great. They're great with technology and computer and learning. It's time on your feet being in front and getting exposed to clients, people who are maybe 15, 20, 30 years older than you. It's intimidating. It can be hard, but the sooner you get involved, and they realize like, wow, I'm much better at this than I thought once you start
Yeah.
getting the experience on it. So I would say I don't know the number, but I would think our average age advisor has skewed down 5 to 7 years over the last 5 years just by the change in demographic of our society.
What would you say the average age of the advisor is at Girard?
I would say it's probably close to 40.
And so when I asked where you guys see yourself in let's say 5 years,
sure,
having built to 5 billion, where do you see yourselves in 5 years from now?
It's tough. It's tough to put a number on that. And you did ask that question. Sorry, I didn't answer it. I think first and foremost, continue in 5 years from now, right? A culture of great people, but more of us, right? Great people attract great people. Culture is intentional. So I would say on that aspect, we have a little foundation card of our 18 principles that we talk about all the time. I don't see that changing, even though you get larger. I think you can still maintain a values-based culture, but it has to be intentional. And when you do that, and good people come and work here and do the right things for clients, like I like to say, the meat falls off the bones. Growth comes with that. I do believe there's movement in our industry that we're going to have to do more for our clients. Technology will allow us to do that. Almost like the family office model is going to continue to move in, where I think we have to look more at the holistic approach with the client. I mean, it's a word that's probably used too much, but both sides of the balance sheet. What risks is a client exposed to? Instead of just looking at their investment assets, can you aggregate and look across their whole balance sheet, both liabilities and assets? Give advice on the next gen of some of our clients. How's that money being passed? What's the tax state ramifications? A lot of those things were left maybe to certain select firms that did ultra wealth or ultra high net worth. I believe that's going to continue to move down in asset size as tech, especially AI, gives us more tools to do that, and being lean and mean. So when you say in 5 years, I think the view of what the financial plan will expand. It will get deeper. I like to say fee compression is only present when there's absence of value. We're going to have to do more for clients, but finding our clients are going to get bigger, and it's going to be more complex. I also think that we have to continue to build out in firms who are our size or maybe smaller, looking at a continued centralized approach where you need a trading team, a portfolio management team, financial planning team, advisors, business development folks. You have people who are in operations, compliance, of course, who are very specialized. I mean, continue to make investments in those areas. I do think alternative investments in some form are being democratized or getting cheaper. They'll become more ubiquitous on the larger custodians platforms. So those will move more into mainstream client portfolios. It's happening, but it's still generally left to the larger. So we do put a 5-year growth plan together. We're 3 years into this one. Sure, at the expiry of that, I'll have to put together another. But we're looking to grow 8 to 10% a year, and make sure though our team grows with that, because it's not just the growth of the top or the bottom line; it's the growth of the number of clients you serve, and you have to make sure that client experience stays top notch. It's not all about just driving a margin. If your margins are driving too high, then you have to really look at what are you doing, from an investment standpoint to stay up with the growth of your business.
Right.
Long answer to your question.
Oh no, you answered it perfectly. I appreciate it.
I don't know about that.
No, building on that, I did want to ask you, I mean, it sounds like you guys really provide an exceptional client experience. Would you be willing to share with us a specific client story by chance, or experience that you think really made an impact or reinforced that importance of that client-centric approach that you offer?
Oh, I do. I just hope I don't get misty when I tell the story. So we had a client hired us right before 2008. It was a couple. They had just both they had been retired school teachers. They lived in Baltimore. They moved to Pennsylvania, and he had some health issues, and they wanted to hire an advisor just because he managed the money, but he wasn't really capable anymore, just because he was, managing doctor's appointments, etc. And they had a pretty nice nest egg. It was fairly concentrated. They were in a bank that was based overseas, so we diversified them out of that, and fortunately we did. That bank actually failed in the 2008 financial crisis, and they just became great, wonderful clients, deal with pleasant people over years. And about 5 years ago, he passed away. We helped her move into a retirement community, and she was doing great. But unfortunately, I want to say it was in 2022, she got ill and passed rather quickly. And we helped settle their affairs. I had gotten to meet their son a couple times over the course of managing the relationship, and we had other team members involved. So one day I leave the office, I call their son and offer my condolences. And he said, hey, my mom and dad wouldn't have had the retirement they dreamed of if it wasn't for you guys and your firm. And to have somebody who you've met tangentially a couple times say that, what a great impact you had on his parents for the 16-year journey that we had to work with them. Just it's a catalyst for what we do and why we do it. So again, like I said earlier, there's not many professions you get that feedback. I don't, you sell a big bundle of software. I don't think they're calling you and saying, hey, this was life-changing. Thanks for doing that. Right. So yeah, that's a story I tell often.
And so switching gears a bit,
Wow.
What certain sectors in the industry are you guys most excited about right now? What sectors do you think are shaping the future wealth management? Any technologies or strategies that you see on the horizon for this industry?
From our industry as a perspective, yeah, not as an investment, but for what transformative technologies are coming to our industry. Is that what you're asking?
Yeah.
Okay. Yeah. So, I mean, clearly, the buzzword and all around all this is AI, right? That what is AI going to do? It's going to transform all of our jobs in our future. And some of us don't have the purview of what that's going to be. But I try to put this context. When software as a service was really developed 15, 20 years ago, and the large custodians opened their APIs to allow data aggregation between outside software vendors and custodial data, so you could have the passive client data back and forth. That was an enormous innovation for our industry. It allowed all of these software vendors and entrepreneurial startups to proliferate, to give us more tools at a very low cost to provide a better service and experience to our clients. It also allowed us to compete with the big firms who could spend, hundreds of millions of dollars or millions of dollars to develop it on their own. Now we're having that done at scale, and we're paying an annual subscription at a very low price for wonderful tools, financial planning, tax, CRM, etc. So that, in my view, took this industry to the next level. It allowed a 5 or 10 person firm to compete with the same or better tools than a major wirehouse, for example, especially if they're nimble. So now, what's the next iteration of that? So you bring AI in and you talk about how is that going to impact the day-to-day on the mundane stuff, like writing a job description or helping you put together a proposal for a client. In my view, some of the sort of mundane work that, I don't want to say mundane, is probably not fair, the more administrative stuff, that's going to be the first shoe to drop. It'll allow advisors to do more, right, and spend their time with their clients. Whether it's security or using a large language model to help writing or automation. And then I think the next step will be it'll move up spectrum to some of the vendors that you use. So, for example, you're integrated. You use a Microsoft platform or Salesforce or whatever your CRM is. do some of the tools there allow you to just be smarter in how you run your business? Of course, it's going to come. Do you get Microsoft Copilot just to help you generate docs a lot faster? And then lastly, how does AI make us smarter about anticipating future client need? And that to me is what's really exciting. So I was out at a conference in Chicago in October, and the presenter took 200 to 300 emails he had communicated with his financial advisor over years, loaded them into a large language model, and did some analytical work to determine what AI came back and said, here's the things that you really worry about. You worry about geopolitical risk and you worry about taxes. So if I know that about you as a client, then anytime there's a geopolitical event that's unnerving, that Mike or Ashley are going to be worried about that, how can I get in front of that and anticipate that need for you? It sounds simple, but our job here is to allay people's concerns and help them see that it's going to be okay, stick with your plan, and if you can anticipate those types of needs. So it's going to be an interesting ride. I mean, the challenge that we're going to have I would recommend no advisor do that, right? Because that's privileged client information. So don't copy and paste a bunch of emails into a chat GPT. But what we're going to have to grapple with as an industry, and you have a lot of entrepreneurial mid and small size firms, is what's the compliance burden? What does it look like? How does that impact you? What are the privacy rules? What's the data that's coming back? That's why I would, look at what vendors are you partnered with? Who are your strategic partners that can potentially help you usher in through some of those complex challenges? And, we need our regulatory environment to get around it, but it's coming and it's going to come fast. And I don't know if my predictions will come true, but I think it's going to be exciting. It's going to be good for our industry. And ultimately, the client is going to get a better experience. If we can be smarter and deliver more, that's a good thing.
Yeah. Mm-hmm. And let me ask this, what investments and sectors is, let's say, Girard most excited about right now? There's been a lot of movement in the equity market and, the fixed income market. What is it that you guys are hot on right now?
Yeah, so we run traditional models, right? So we don't necessarily sector overweight, but clearly, technology. But I'll say the other area that we've had a keen interest in investing for years is the apparatus and the companies that support the pharmaceutical and research industry. So as the old cliche says, that who made all the money in the gold rush? The people who sold the picks and shovels.
Right.
You could probably say that about AI too. But we really like a lot of the companies that support the research. So a lot of big pharma, it's so expensive to bring drug to market, right? So they look to a lot of outside firms to do everything from supply, equipment, to research platforms, to actually conducting some of the research, to helping with clinical trials, things along those lines. So the pace of trying to get a drug to market with patent expiration and the cost, and for a large pharma to scale that infrastructure up and down, pretty hard to do, right? Depending on what your drug pipeline is. So can't give specific names. We have about four. We run individual equity portfolios. We have about 4 companies that we've put into the healthcare sector that really live in that, pharma, and they become an indispensable partner for a pharma. You can't extricate yourself from that relationship. It's almost like having a payroll provider, right? It's too challenging to leave. So we call those wide moat businesses. So we are excited about that industry, and these companies get bigger and stronger. They're very acquisitive. They buy up smaller partners, they expand their and they have deep relationships with pharma. So sometimes they expand their product offering based on what the customer requests. So you probably weren't expecting that answer, but it's a sector subsector in healthcare that we really like.
You're the first.
I haven't heard that one.
Yeah, you're the first podcast we've ever had that I think someone's ever dove into pharma. I like pharma myself, right?
Right.
But yeah, I appreciate that.
Sure.
And let me ask you this: what about real estate? Do you see with fluctuating interest rates, do you think that the other shoe has dropped on commercial real estate? Do you think that's a good buy right now?
We did a pretty extensive commercial real estate study last year. Most large office, real estate it's vast and deep and diversified. It's different in parts of the country and different types, multifamily versus strip malls, et cetera. The big risk is clearly downtown business center office. A lot of that real estate is not necessarily on bank balance sheets. It's on insurance companies. It's been securitized, sold off. Real estate's an efficient market. It's going to correct itself. It will be painful. It will be painful for some. I think we just saw a large deal last week for office. So is the bottom hit? Don't know per se. But real estate itself, we think owning private real estate in particular is still a great non-correlated asset to both stocks and bonds, and it produces free cash flow. The key is you have to have a long holding period for it.
Yeah.
And you may not always be liquid. So, whether it's a client that has private real estate that produces cash flow outside of what we manage for them, we love that, right? It's like having a wonderful pension. But the question is what happens with some of these, to convert a lot of like a downtown office tower into a multifamily, it could be physically impossible. There's a lot of construction limitations. Don't think that if you really looked at even the holdings on the largest banks in the country, that there's an overconcentration of that type of real estate. And then if you get into the suburbs of most metropolitan areas, office is holding up much better. It's easier to commute in and out. You can have flex working. You can run like we do in this office. We run the hoteling operations. We're in a suburb. So, it may not be for the faint of heart in the near term, but for the long term, I would just say to anyone, make sure your real estate portfolio is diversified. And publicly traded REITs tend to follow and are as volatile as the stock market, if not more, and are very interest rate sensitive too. So they don't always necessarily give you that non-correlated diversity that private real estate would.
Thank you.
And before we wrap up today, what are your predictions on the economy? Short term to long term. What do we think is going to happen? I mean, the country's debt has doubled in recent years. What are your predictions and the economic outlook there?
Yeah, great question. Hard question to answer. I think the U.S. economy never ceases to amaze us. It showed tremendous resiliency in the face of much higher interest rates. I think everybody 18 months ago predicted that we'd have some form of recession, and maybe we've had some rolling recessions in certain industries. I mean, eventually the toll of higher rates is going to take an impact on the economy. You're going to see whether it's certain areas, and you've mentioned real estate as being one already. Stress and pressure will ultimately prove out on the consumer. But jobs are plentiful, and the labor market continues to grow and in some ways astound. And I think it's even shocked the Fed. So I think we'll have good growth in the near term. It might be a little bit bumpy. Inflation's proven to be a bit stickier. The fact that we went from 6, 7, 5, 2, now 1, now people are saying no. Interest rate cuts. It's not really a surprise to us because the data has always shown over the last 6 months that growth is good. So I think as we get through 2024, we'll see a pretty healthy, growing U.S. economy. It's an election year, so it could get a little crazy here in the fourth quarter. Over the long term, what does 2025 look like? Do higher rates start to take an impact next year, and you start to see some weakness and some slowness? You're going to have potential change of administration. If not, you might even have a change of what the House and the Senate look like. As you look at the deficit, no one likes to talk about it, but a small part of the U.S. budget is discretionary. A large part is entitlements that are preordained. And until we really start talking about some level of entitlement reform and looking at Medicare and Social Security, the deficit will continue to balloon. It's expensive now because rates are higher, and you're even seeing what's the demand look like in auctions. So I'm not a politician, don't want to be one, but someone with some courage is going to have to stand up and take initiative on those on those non-discretionary items in order to get deficit under control, or it's not going to happen.
Yeah.
Thank you.
Exciting times ahead for sure. Well, that wraps us up for today. David, thank you so much for sharing your insights and your knowledge with us, and your personal journey as well. It was an absolute pleasure having you on the show with us today. Thank you.
Thank you both. My pleasure. Great to be here.
Thanks so much. And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Join us next time for more engaging conversations on topics that truly matter. Until next time, take care.